Hello ICT traders, welcome back to the channel. This video is about ICT Order Block for beginners. Those of you who have been here and have been following every video I've been making on this YouTube channel, you already know what we are doing. And for those of you who are here for the first time, what we are trying to do in this particular YouTube channel is to actually have a sequential arrangement of all the ICT videos that will help you to become a professional trader after watching all of them. We have been discussing the ICT core basics, and we are now talking about institutional reference points which are under the ICT core basics. Today is about order blocks. We've discussed quite a number of them right here. All you have to do is to simply locate the particular playlist. We have discussed breaker blocks, we have discussed fair value gaps, and we have also discussed mitigation blocks in depthly. You can simply watch all of them right there and simply go to every single video. They are arranged sequentially. So let's talk about order blocks for beginners. For those of you who have been following ICT concepts, you might have heard people talk about order blocks, and you really want to know what exactly is order blocks. That is exactly what I'm going to be discussing in this particular video with you. So what exactly are order blocks? Order blocks are being defined by several kind of people. Different people have their own definition of order blocks, but I'm going to give you a simplified definition on how to basically use these concepts for your trading. Now, I want to specially thank the founder of ICT, Michael J. Hodison, the founder of ICT. Actually got all these ideas from him. You can check ICT's official YouTube channel to get a lot of content right there. What I'm trying to do is just to give you a simplified version of everything I've gotten right there. So let's talk about order blocks. What exactly is an order block? I just went to Google and checked what exactly is order block. Order block in Forex are price levels where institutions attempt to buy or sell a foreign exchange pair without potentially having too much of an impact on the pair's price. Now, what that means is that the word order block is a combination of two different words. The word order and block. Order simply means your open interest to buy or sell. Block simply means a very huge or large transaction such that only institutions and big financial firms can do. That is exactly what an order block is. And since you cannot literally see what is happening from the back end, what we do is to use the information from the price action to know exactly where the institutions are taking their orders. And that is exactly what the concept of order block tries to simplify to you. And when you look at your candlesticks, you're going to see these over and over again. I'm going to show you how to identify them. We have two types of order blocks. We have the bullish order block and we have the bearish order block. The bullish order block causes price to move in a bullish direction, and then the bearish order block causes price to move in a bearish direction. So when you come to your chart, the first thing you need to look out for is to know exactly where price is going, where the institutions are taking price. Now, looking at what we have right here is a representation of what we call a bullish order block, and right here is a representation of what we call a bearish order block. Now, in a bullish scenario, which is when the market is moving in an upward direction, you want to see the institutions always taking their trades in the best position possible. What that means is that now this is an example of a bullish scenario right here. Let's assume price has been moving to this side, move like this, coming to this side. Now, the way the institutions take their trade is that they take their trade at the bottom of this area, because this looks like a discount to them, the best price possible to buy. If you are buying, you actually want to buy at the cheapest price possible. That is where we find the order block. When you have people selling from here to here, and then the institutions, or what we call the big boys, decide to take the trade at the cheapest price possible. That is where you can find an order block. And then the order block in a candle representation is normally the last sell candle, where the institutions have decided to openly take all the orders that were coming to them as a sell. Now look at this. If you look at what is happening from here, this is a sell candle coming in. People are selling, and at this point the institutions felt like this is the best price for me to buy from sellers. They decide to buy from here, and how we know that this is an order block is that it must pass through some of the characteristics of a valid order block. Look at this. This last sell candle must be completely traded through by the buy candle. And that buy candle does not only come in slowly, it must come in aggressively in such a way that you see it creating either a break of structure, or you can see a sudden displacement of price around it. This is what I mean by that. Look at this. As price came into this place, coming down to this area, you can actually see that price has been aggressively rejected at this point. Okay, so look at this. Price was coming down, people were selling, and all of a sudden the institutions felt like at this point we want to buy, because you can only buy when there are sellers in the market. If there are no sellers in the market, you will not be able to buy, and this is them coming in. When you see this sudden movement from here, so this last sell candle, now the color of the candle doesn't matter, because many people use different color of candlesticks for different reasons. So just know that the last sell candle, as in this point, this candlestick is your order block, and we call it a bullish order block because it created a bullish movement from there. So this is why we call it a bullish order block, and this is how you should know that this order block is where the institutions are dealing with. You should be able to see the subsequent candlestick, that is the bullish candle, totally traded above it. It can be more than one or two bullish candle. This is what I mean by that. This is a bullish candle, right? If we have one here, then we have another one that printed above like this. It is all a valid order block. You can have more than one green candle traded above it. So this is how you define your order block. So this red candle is your bullish order block. I hope this is explanatory enough. Since you see price traded above it, it can be more than one, two, or three candles that have been traded above it. I will soon go to the chart and show you how to basically identify it. And then this kind of order blocks in a bullish scenario, they serve as a support level, and in a bearish scenario they serve as resistance, because you can actually see as price is coming, it's rejected there, and then it moved out of there. Price comes, reject it, and then it moves away from there. So you see it creating this break of structure. This last sell candle was where the institutions decide to take the buy. Then they buy from here, and it even created this break of structure. You want to see some sudden price displacement or sudden price action that is a bit aggressive if that order block is truly where the institutions are taking their trade. Why? It is simply because they are entering the market massively, because these are institutions. They are coming in with billions of dollars to trade in the market. So this is a bearish order block scenario. The same thing, price coming back, and this is it. This last buy candle that price actually traded away from. Let me show you that. Let me just change the color of this one. So price actually moved away from there, and you can actually see that price has closed from here. Okay, that is exactly what you look out for. Price have traded below it, closes right here, just like a bearish engulfing pattern, but this is beyond a pattern trading strategy. So the way we trade with this information is that we expect to see price come back to the place and then continue moving. Why? let me show you why price always want to come back to an order block before trading above. Now let me give you an example. Assuming you go to the market to buy 10 iPhone 14 Pro Max, that is an Apple phone, you want to buy 10, and you went there with the exact money, okay, and each one is priced for $2,000, for $2,000. If you ended up getting only 6 iPhone 14 Pro Max, and let me show you a scenario of that. If you have this, something like this, you went to the market and at this point you're buying iPhone 14 Pro Max for $2,000. Okay, so the price from here, you got only 4 because there are not enough iPhone 14 Pro Max and you actually needed 10. Okay, 10 iPhone 14 Pro Max. So you actually saw this opportunity and you bought 4, and all of a sudden the price of this iPhone 14 Pro Max went to $5,000 at this point. $5,000. Okay, went to $5,000 and you were able to sell it at this point. You sold all the 4 and made profit of almost $3,000 on each one. And you that knew that you have an information about what is happening at this price, and then you are just looking at the market and you saw the price of iPhone 14 Pro Max came down to almost $2,000, but this time around it came to $2,200. Now what you want to do once you see the price comes at this point, you want to buy more, because at this point you have more than 10 available because people sold their own from here down to this level. You have more than the 10 iPhone 14 Pro Max that you needed. So you will actually buy more plus the profit you've made and the remaining money you kept for the 6 that you were not able to buy. So this is what causes price to be rejected at this point. You bought all of it and it even shoot above the previous level. I'm just trying to just give you an example of why price gets rejected from an order block. Okay, price is actually coming to pick the remaining order that has not been completely filled, and then this time around it even moved above the previous level it went to. So this is my simple explanation of why an order block rejects price. Okay, so looking at our chart, you're going to see this differently. You're not actually going to see it very smooth like the one I just sketched right here. You're going to see it just like your price action. There is nothing funny about this. You're going to see it time and again. But look at this. We're just identifying an order block. Look at this. If I pick this as my order block, okay, if I pick this as my order block, let me just make it more transparent so you can see it. If I pick this as my order block, does it met up with the requirement of an order block? Let's look at it and see. We are looking for price to actually close above the order block, and then by the way, if you're marking an order block, you want to mark everything. You want to mark out everything, that is including the wick and the body. And how you know that order block has not been violated is that you don't want to see price actually closing below the order block. Okay, that means if price is coming back, you don't want to see it closing below. I'm going to show you that properly once I go to show you some other ones, but this is what I'm saying. This last red candle, now I have made a video sometimes back explaining how the wick matters. We use the last candle that has the longest wick. Now if you're trading supply and demand, you're going to mark this area, entire area, and you're going to majorly focus on this blue candle. But if you're trading order block as ICT third, what you look out for is the last sell candle, because that is where the institutions decided to come back to the market. So this is it. This is the order block as ICT third. So we have seen this bullish candle closing above. Even this bullish candle is not above it. Let's see it closely. It's not above it, but this one actually closed above it. So this bullish order block has qualified to be an order block as we can look at it. Okay, so this is it. So price actually came back into it. You can see push here and then pushing up. So this particular candle, you can watch it and see price coming back to it. There are moments that these things don't attract price back. So this is a valid order block because we can actually see it creating a sudden displacement of price from there, and this is an identification that these institutions are here, because it is only the institutions that have the capacity to completely turn the direction of the market. Look at how the direction of the market has shifted from here, from downward to upward. So this is an order block. Let me mark that as market structure shift. I hope this is explanatory enough. I'm not showing you how to enter trade with an order block. I'm only showing you how to identify an order block. Then I'm using a very rough price action to show you that, so you will know that these things can be identified on any kind of chart. So this has become your order block, this one I just showed you. So let's look for another order block and see if we can have an order block. So look at this. Is this an order block? Let me show you that. This last blue candle, is it an order block? Now you will have to sit and watch and know whether this is an order block. One is that this particular buy candle causes sudden price movement, which we can actually see traded below all these relative equal lows. If you're watching it from here, as price came here, pushed up again, and look at this break of structure from here to here. So this particular candle has qualified to be my bearish order block. So if I'm watching this, I am expecting price to actually come back into this area. Okay, and that is what makes it very simple, easy, and straightforward. As price shifted completely, you can actually see that if the institutions, remember I told you that if the institutions are interested in that particular price, you will see a sudden movement that you cannot deny. You can decide to mark this as your break of structure or this place, either one that you're watching. So this is where I decide to mark as my break of structure. Okay, and I'm expecting price to come back to that particular place. Why? It is simply because of that same reason I showed you. So you can see price actually came back to get a better price and completely fill up the remaining order that the institutions have come with. And you can see it being displaced and going away from it, even coming back to this place. Now notice something. Just watch out this. Look at this particular order block. Notice how the body of the candles are respecting it. The bodies of the candles, like this one, are respecting it. Anytime you see the body of the candle closes above the order block, that order block is not a valid order block. But notice how the bodies of the candles, like this one and this one, are closing inside the order block while the wicks are pushing above it. I'm actually going to show you everything that pertained trading with order blocks subsequently, but just watch out this. Notice how all the bodies of the candles just decide to close inside the order block while the wicks actually traded above it. Okay, so watching these things is important. So you need to just sit through and watch all of them. Look at this. Let me show you something here. Let me show you something here. Another scenario. Price came and we have this arrangement. I'm marking this as my order block, not this, because I'm not trading, supply and demand. This particular candle, I'm marking it. So look at what happened. It actually qualified to be called an order block. Why? Because I'm seeing this as my break of structure, okay, and I have actually closed below it with this candle. And look at it, price coming back. Notice how the bodies of the candle respect the candlestick I call an order block. Notice how the bodies of the candles right here, close here, this one also came back here, this one came and just touched the order block and pushed down. I told you earlier that this is not a trading strategy. We are only identifying order blocks. Let me show you something. This particular candlestick, does it qualify to be an order block? Yes, to me it has qualified, because as we see, price came right here. We had a sudden movement that caused this movement from there. And even in the future, price is coming back into the order block and pushing up. So it has qualified to be called an order block. I'm not just selecting some very nice price action to show you. I'm showing you the rough side of identifying an order block. I wish I can see. Let me just go to the starting point of this price action so we can see how we can identify them practically. Okay. So we are watching these things. So look at this price action right here. Look at these price actions right here. So look at this. Price moved to this place. This one. This is an order block to me. Okay. This is an order block to me because it is the last sell candle that caused this movement. Even though price didn't necessarily come back to retest it, this may be probably because of broker difference or maybe something else, but it is an order block. It is still an order block whether price tested or price did not test it. It is still an order block. Price can decide to test the order block or maybe fair value gap. I'm not talking about fair value gap here, because you can actually see price actually came back to retest the fair value gap, not the order block. This is a fair value gap, 1, 2, 3. You don't know what a fair value gap is, you can actually go and watch the video on my YouTube channel. Fair value gap is actually here, very in-depth. I've actually talked about fair value gap. So that is a fair value gap. Price didn't necessarily come back to the order block. Okay, let me show you something. I've just seen something quite interesting. So look at this. Price came, pushed down. Can you see this red candle? If I mark this red candle as my order block, am I wrong? That is a question I want you to just ask. Am I wrong if I mark that particular candle as my order block? Am I wrong? No, I'm not wrong. Why? Because this red candle created this entire movement. Okay, created this entire movement. Look at this. This red candle created this break of structure right here. I'm not considering this as a retracement. Why? Because I'm not seeing a consecutive 3 candles that are closing below each other, that are closing below the previous low. So this is just like a low volatility trading hour where there is no so much volatility in the market. So I told you that we can have 1, 2, 3, more than 2 candles to close above the last bearish candle. So this is what I wanted to show you. So we have more than 2 right here, 1, 2, 3. So that is exactly what I'm trying to explain to you. So price actually came back to this particular one and retested it before moving up. Let me show you another one right here, if I can see. Okay, look at this candlestick. Do we call it an order block? This large bullish candle, it is an order block. It is an order block. Why? Because it is the last buy candle that price moved away from. We have more than 1, 2, 3, 4. It is an order block to me. Okay, it is an order block. You're not going to see your price action very smooth, guys. You have to settle that in your mind, because that is the reality of trading. So forget about all those videos you see online, you know, showing you some very nice price action. I'm just doing it on the chart so you can see how important it is to know that these things are not as easy as they were thought. But the reality is that everything can be understood. So look at this. It created this price movement. That is a break of structure, and price can actually come back to retest it. Okay, yes, price actually retested it and then had this movement, even though it is a very rough movement, but you can actually see the importance of that. So guys, this is all about order blocks. I can explain order blocks in the subsequent videos, how to use it for trade entry, what is the best way to use the order block. But for identifying order blocks, I think this video is enough. You can go ahead and check it. Just go ahead and check your charts and see how you can possibly identify them. Okay, so this is all about this video, and if you have any question, guys, let me know in the comments. I'll be right there to answer you. See you in the next video.